All right. Good morning, ladies and gentlemen. You are welcome to the Nairametrics Regulatory Economic Outlook webinar for 2021, brought to you by Nairametrics.com, financial advocacy group. Absolute warriors for financial literacy. That's all Nairametrics is about. Nairametrics wants to inform and educate on all matters economic and all financial matters going on not only in Nigeria, rest of Africa, around the world. We're concentrating on Nigeria. What are we talking about today? There's going to be three key items that this webinar is going to be looking at. The 2020 Finance Bill, the African Continental Free Trade Area Agreement, the Petroleum Industry Bill, and what this webinar is going to be looking at with our fantastic set of panelists. And this is star-studded panelists we got today, here brought to you by Nairametrics.com. How do these items, Finance Bill 2020, African Continental Free Trade Area Agreement, Petroleum Industry Bill, how do they affect businesses? How do they affect businesses? Because when you think about the regulatory environment, you're thinking about ease of doing business, right? We want to make things easier. I was listening to a podcast where the governor of Texas, Greg Abbott, they were asking him, how come Elon Musk's Tesla's AI truck division is moving to Texas? How come Oracle is moving its headquarters to Texas? How come Charles Schwab is moving his headquarters to Texas? And he says, well, in Texas, we want to have businesses feel free to operate without the overbearing hand of regulation. I mean, regulation is required. Yes, it's needed to keep things fair, but it's also about the freedom of businesses. So once again, Nairametrics.com, Regulatory Economic Outlook Webinar 2021, looking at the Finance Bill, looking at the African Continental Free Trade Area Agreement, looking at the Petroleum Industry Bill, and how they affect businesses. African Continental Free Trade Area, think about trade. Think about the amount of dominant headlines we've had regarding trade this year. Can African nations come together as a unit and trade together? Nigeria has closed their land borders since 2019 of August. It's had some effects. You've had the US-China trade relations. Dr. Ngozi Okonjo-Iweala hopefully becoming the next Director General of the World Trade Organization. So that alone, there's so much to talk about there. Lots to talk about with the Finance Bill with respect to the fiscal policy initiatives of the Nigerian government. Will you pay higher taxes? What's the outlook? And then the Petroleum Industry Bill. Oil and gas is still so important to Nigeria. We looked at the, think about the third quarter foreign trade statistics for Nigeria. 80% of Nigeria's trade is oil and gas. It's still so almost 50% of consolidated revenues for the government depends on oil and gas. So there's a whole lot to talk about today, and we credit the good folks at Nairametrics.com for putting this together. I am now going to bring in the head honcho himself, the founder of Nairametrics.com, Ugo Obichukwu, aka Ugo Dre, who is now going to introduce the star-studded panelists that are going to take us through this presentation. Oga Ugo, good morning to you, sir. You're very welcome. The floor is yours.
Thank you very much, Rotus. Thanks so much for the intro. It's going to be another exciting session today. Thank you to everybody who has joined this session. We see our panelists, our participants joining in already. So welcome to all of you. I can assure you this is going to be another engaging session. I hope that internet doesn't fail us today at all. As Rotus as just hello, Rotus, can you hear me?
Yep, I can hear you. You're loud and clear.
All right. So it's going to be a star-studded webinar today, and I have the pleasure of having very, very important people, subject matter experts in the field of discussion today. I mean, it couldn't have done it better. We are so excited to have these people on here to come and share with you all knowledge, important information that you can use. These are the kind of information that you pay heavily for. I know, but they're going to come here and basically dissect three key regulatory issues that I think would shape most of 2021. Whether it's the finance bill, whether it's the PIB that we've been waiting for years, or whether it's the AFCFTA that we all know would open Nigeria to the entire African market. These are three critical areas that we're going to dissect today. I'm so excited and I hope that you all are. So thank you all very much. And as usual, if you can't log on, or maybe for some reason you get off and you can come back on, we are also broadcasting this on our YouTube channel, and so you can go there as well and broadcast. And as usual, we'll always have this recorded, for all the participants, provided that you've dropped your email address. So I'm going to go right in to the introduction. As usual, it's ladies first. I'm going to start with ladies. So first of all, we have Ijoma Uju. Ijoma Uju is a partner, corporate and commercial at Templars. She's going to be joining us. She's going to be talking about AFCFTA today. So Ijoma, so super happy to have you here as well. And Ijoma works with Templars. Templars is one of the biggest commercial law firms in this country. I'm sure you've heard of them before. And joining Uju as well is Yemisi Awonuga. Yemisi is a partner, energy and projects at Templars as well. So Yemisi is going to be sitting on the finance bill panel, as well as the PIB panel, sharing important information for all of you, to learn from. And now I'm going to go to the men. I will start with Taiwo Yedele. Taiwo Yedele, I think is the household name, needs no introduction to a lot of us. Wherever you are, whether you're on social media or whether you wrote icon at some point in your life, or what, you must have one way or the other come across Taiwo Yedele. Taiwo Yedele is a partner fiscal policy at PricewaterhouseCoopers PwC. So excited to have him on board and today. Now we also have a very good friend, Olufemi Bibem. Olufemi Bibem is a partner at KPMG as well. If you all recall, he was at the very first Nairametrics Economic Outlook in January, and we're just talking on the sidelines of this webinar. We're like, my God, nobody expected what happened this year at all. So, but Femi, good to have you all here and hardy at the last Outlook we have for the year. And so those are for the consultant. We basically just picked up, guys that would cover almost everything from a legal point of view, from the consultant point of view. And then we also go to people who are actually making policies as well. We also have on this webinar today, Adetola Onayemi. Adetola Onayemi is an international trade and investment lawyer, very, very much involved in AFCFTA, well-spoken. He's been on a lot of webinars, and we're so happy to have him on as well. He's going to be breaking down AFCFTA to us today. And then I also go to Otumba F. Meshoye, the chairman, Man Ikeja branch. He's going to be ably represented today by Dr. Israel Osidikpe. Very also well, rounded when it comes to issues of the economy, particularly from the manufacturing sector point of view. I mean, there's a lot about AFCFTA that affects the manufacturing sector. So he's going to be chiming in his own views as well, and perhaps maybe what we should be doing to take advantage of the AFCFTA. And last but not the least, the co-managing partner, commercial partners, Nnamdi Nwizu. Nnamdi is also going to be, joining us as well in this webinar today. So excited to have a super team like Rotus has said, and of course Rotus as well is on the show. So how are we going to do this today? It's going to be three in one, like we said, 3 sessions. There's going to be the finance bill first, and then the AFCFTA, and then the PIB. I'm going to be moderating the first 2 sessions, while Rotus, my able partner, would also moderate the last session. So thank you all very much. As usual, you have the Q&A box, for all your questions and banters. As time proceeds, the panelists will also go there and respond to your questions if need be, as well, if time permits. So keep it going. There are questions that we're going to take from the Q&A as well. If you've got very good questions, please put them in there. The guys at the back end would send these questions over to us, and then perhaps maybe we can ask the panelists on the event. So thank you all very much, and we dive straight in. I think we're going to start with Mr. Taiwo Yedele. Good morning, sir.
Good morning to you, and thanks for having me.
Thank you very much so much, sir, for coming to this webinar, for agreeing to join this webinar. We hope that it's going to be another exciting. Anyway, we trust you now, so there's no doubt about it. So, sir, you're going to be taking us on a short presentation for finance bill, right?
Yes. If you would just allow me share my screen.
Definitely, sir. Just go ahead.
Excellent. I can see now. Do you confirm that you can see my screen?
Yes, clearly.
Okay, great. Thank you very much. Again, welcome to all the participants, and let me commend Nairametrics for this very important initiative. I think maybe sometimes we don't appreciate enough the type of intervention that people like you guys are doing. So this is really commendable. Well done.
Thank you very
Please
much.
keep it up. Yeah.
Thank you.
I know I have only 10 minutes to go through what I have to speak about before the panel conversation, so I'll be quick. So I'm looking at essentially the Finance Bill 2020. And what I want to be looking at in the very short time is to give an overview and context, and then highlights of some of the key changes in the Finance Bill. And what does it mean for us, people who are on the call, their businesses, their relatives, their friends, and for themselves, and also for the economy at large, as well as what's the outlook for 2021. So they say context matters. We started 2020 with a lot of hope, high expectations, as is always the case. We had no idea what we're about to face. But thank God we're still standing, even though it's been difficult. So the year started with the Appropriation Act, and then there was Finance Act of 2019, and then COVID-19 happened. I think, and I always say that the economic impact of COVID-19 landed in Nigeria first, even before the virus itself landed in February. Because as soon as the rest of the world was affected, demand for oil was going down, the price of crude oil declined, and that impacted on our ability to fund the budget, to generate foreign exchange receipts. Naira devaluation started happening, and then inflation was rising, and every other thing. Of course, it was sensible for governments to revise the budget, as well as the medium-term expenditure framework and the fiscal strategy paper. At the sub-national level, 2020 turned out to be the year, I'll say the year of confusion. I did not see enough concrete and sufficient understanding of the issues by many of the states. Many of them responded to COVID-19 in terms of palliatives, but I think they were just doing it to tick the box because the World Bank had promised to give them some, grants if they were able to grant some relief, particularly for poor people and SMEs. On the African continent, there was a lot of focus on digital economy taxation, because really, I think sometimes the easy way for politicians is to say all our problems have been created by other people other than us. That's the way we try to avoid responsibility. So blame the multinationals, blame the Googles, blame the digital economy guys. As much as I do agree that everybody needs to pay their fair share of tax, I also think that the biggest evasion we have is happening right under our nose within the country. One example I'd like to give is South Africa is a country of about 50 million people. That's maybe about a quarter of Nigeria's population. They have exemption for personal income tax for people who earn about 2 million naira per annum equivalent. That's more than 150,000 per month. You don't pay any personal income tax in South Africa. Yet, South Africa makes more money from personal income tax than the entire federally collected revenue and all the taxes by all the 36 states combined. South Africa makes more than 11 trillion naira equivalent from personal income tax alone. Their top 1%, which is less than 50,000 people, pay about 6 trillion naira. That's the amount that FRS will struggle to collect. So really, the issue is that we have to look inwards first before we start blaming other people. For the rest of the world, 2020 turned out to be the year of responding to COVID-19 as well. So we had 26 states responded in Nigeria so far based on the data that we are tracking. And we had a lot of responses from the Monetary Authority, CBN in particular, but also from other agencies, as you can see on this screen. And I would encourage you, there's a link under this slide. Once you have the presentation, if you go there, you see how we are tracking at PwC. We are tracking all the government measures. You can see all of them categorized. So having that information and that knowledge is extremely important and useful. So let's now focus on the finance bill. What are the key changes? Before then, I'll tell you about the objectives. So one, government wants to adopt counter-cyclical fiscal policies. In other words, when the economy is struggling, you want to try and stimulate economic activities. For example, you want to reduce tax rates. You want to be able to grant incentives. Unfortunately, our government also does not have the fiscal space to give away a lot of things now, because we're already in very difficult terrain in terms of particularly debt service cost to revenue ratio. For many of us who would remember, in Q1 of this year, we spent 99.2% of federal government revenue to service debt. So this is not a country where you have a lot of money to throw around. And also, we are not in a position that we can just keep printing Naira. We're not the US, because Naira is not a global reserve. Then there's also the idea to try and prioritize job creation, economic growth, and to ensure that there's some coordination between monetary and trade policies as well as fiscal policies, because if we are pulling in different directions, it's very difficult for economic recovery. There was also part of the recommendation or the proposals in the bill has the objective of trying to reduce, the burden on taxpayers. So there's the minimum tax of 0.5% of turnover applicable to companies in Nigeria that is going to be reduced to 0.25. That's reduced by half for the next 2 years to enable them cope with COVID-19. And of course, government wants to create a COVID-19 pandemic response fund. And there's also some proposals for fiscal responsibility to ensure fiscal efficiency in terms of our cost to revenue ratio, particularly for MDAs. Don't spend all the money you generate. Maybe you only need to spend 40% of it. Why not remit the surplus to government? And then to implement some procurement reforms around how we award contracts and manage public resources. Now, so what I'm going to do quickly in the next few minutes that I have left, there's a lot of, in fact, this finance bill of 2020 is proposing to amend 13 different laws, and it has more than 70 sections. So of course, if you give me even a whole day, we are not likely to finish it. And in fact, I have to excuse myself now from a meeting that we're currently having with the lawmakers to agree, what the final version would be. We had public hearings on Thursday and yesterday. So this is still moving, but these are substantially the key provisions that you need to be aware of. I'll speak to just 10 of them, and those are the ones I've colored differently on this slide. The first one is that for people who earn minimum wage, there's a proposal now to exempt them from personal income tax. So really, a country cannot become rich by taxing poverty. And I told you about South Africa just a few minutes ago. Where the money is for people who are making money. And you have to always think about fairness in the tax system, which means ask people to pay according to their ability. If you throw someone who is poor up, just because you want to collect taxes, when they hit the ground, it's blood that will come out. There's no money to give. So this is a good one. I think with time, we should be able to raise that threshold even higher than 30,000. If South Africa can do almost 150,000 Naira a month, we should be thinking about something close to 100,000. Then the second one is, I mentioned this already, for companies, their minimum tax rate to be reduced by 50% from 0.5 to 0.25. And for people who donate to COVID-19 intervention, whether you've donated in kind or in cash, but this is companies, so I need to emphasize. There's no provision yet for individuals. It's one of the things some of us are trying to push, that if companies can get relief for giving donation for COVID-19, why not individuals? But at the moment, what we have is for companies alone. Then for small businesses, the provision of the law today is that every company in Nigeria must prepare audited financial statements and file their tax returns. So this finance bill is proposing that the small businesses don't have to do audited accounts, and that FRS can prescribe the format in which they must submit their accounts to the tax authority. The idea is that audit is very expensive, and most times small businesses can't cope, they don't have the resources, and maybe it's not even very useful for them to do it. Then we'll be able to use electronic means like email now to be able to communicate with the tax authority, receive assessments, send your objection, and all of that. For those who may be losing their employment, anybody who receive compensation for loss of employment, that is 10 million naira or less, will not pay any tax. If you receive more than 10 million, then you have to pay 10% capital gain tax on the excess of the amount you receive. Government is planning to establish what they call unclaimed fund trust fund. And what they're looking at is if you have unclaimed dividend or you have money in your account and the account is dormant and it has been so dormant or the dividend has been so unclaimed for 6 years or longer, the money goes into this fund and government will manage it to fund infrastructure and whatever it is on behalf of Nigeria. And when you show up in principle and on paper, you get the money back. Another one is that small businesses will be exempted from education tax. This is just to make it clear. It wasn't clear last year when small companies were exempted from companies' income tax, whether they were also exempted from education tax. This bill is proposing to replace the stamp duty we pay on bank transfer now with what they call electronic money transfer. And some of us think that this is a very creative way for federal government to take advantage of the state because stamp duty is revenue of the state, but if you call it a different name, it goes to federation accounts, everybody shares it. So I personally am pushing against this and hopefully we succeed with it. And the last one is that we have provisions in this finance bill to make government agencies, you can call them state-owned enterprises or MDAs, to be more efficient. And you see that the size of the budget for 2021 is a lot bigger than we've ever seen before. It's over 13 trillion. The major increase in that budget is because government is now asking those MDAs to bring in their revenue as well as their expenses to be under the budget purview. So hopefully this will help us to block some inefficiencies and leakages in the system. So finally, what's the implication and what's the outlook for 2021? Now, this will mean different things to different people. So for governments, they'll keep focusing on how do you generate revenue because really we have a revenue problem in Nigeria. For tax authorities, they will still be under the pressure to collect money from people who are not making money. Vast majority of Nigerians are not making money, so it will be difficult for them. For taxpayers, you need to make sure that you do the right thing. If you don't do the right thing and then you get on the wrong side of the law, you have additional problems to deal with that you can easily avoid. For the general public, I think it's important for us to keep thinking about the social contract. Do your bit. 2 wrongs, they say, do not make a right. And then you must show interest and hold government to account. And as I close, I'll quote, this Martin Luther King Jr. quote, which says, "We must accept finite disappointments, but we must never lose infinite hope." So I'm one of the people who are so optimistic about Nigeria to say whatever it is, I believe that better days are ahead. So thank you very much for paying attention to me.
Thank you so much, Taiwo. Better days are ahead. I mean, I'm also one of those who believe so much in this project, Nigeria, even though a lot of the people behind us, a lot of young Nigerians may have given up and finding their way, finding a new beginning in countries like Canada. But we still believe in this country and we got to find ways to get Nigeria back to where we always wanted it to be. So thank you so much, Taiwo, for this very instructive presentation. One thing that I picked straight up was that people with minimum wage may not need to pay personal income tax. So that is, good news. I hope that ends up in the finance bill as signed by the president when it's eventually sent to him. So interesting nuggets. So we're going to be asking questions as I said earlier. Please remember, dear participants, we have 3 sessions. So in session 1, we're going to be having Taiwo Yedele. He's already on. Olufemi Babem. Femi, are you here? Can we turn on your camera? And then Nnamdi Nwizu are going to be joining me in this session for the Q&A. Please, if you have questions, please drop them in the questions box, and then the team would have that sent to me. Do we have Namdi, okay, I can see Femi, great, and I can see Namdi. Thank you all so much for joining. I mean, you've seen Taiwo's presentation. I'm gonna get back to you guys on what you make of it, but let me start with Taiwo first. Taiwo, you talked about Nigeria's tax revenue compared to what South Africa is doing. We've always known that the challenge we have in this country is actually not lower taxes, but the government being able to generate enough tax revenues. So with Finance Bill 2020, do you see anything in here that can perhaps raise money for the government? And if yes, I know it's difficult to put you on the spot now, but from a ballpark point of view, what are we going to do in terms of tax revenue? Is it going to be higher taxes, higher tax revenue next year compared to this year? What's your outlook?
Yeah, good question. I think one thing that is good with the Finance Bill 2020 in terms of policy objective is that there will be no new taxes and there won't be higher rates as well. So that's a good thing. Hopefully government will sustain that. So the question then is, where do you get the money from? I think that two biggest areas where Nigeria can raise money from is one, to use technology. We've seen the example of Kaduna State. Kaduna State did not introduce new taxes. Just to say, by law, cash payment for taxes is outlawed in Kaduna, and then you pay taxes electronically. You can use your mobile phone. It's not about internet alone. And what happened to them was they were able to raise their revenue from 13 billion to more than 44 billion. That's more than 200% increase. That is what Nigeria needs to do. There are a lot of people who are evading taxes. So once you address issues around, the use of technology and tax intelligence, the other thing that is so critical is to build trust. When you see politicians with a convoy of vehicle, or even in this COVID era, I was so disappointed. One of the items in the 2020 revised budget after COVID was a 2 billion naira to build a library for the National Assembly. And I said, goodness me, we're talking about COVID. People are working from home remotely. There's a lot of resources on the internet. You don't have to pay to access it. And somebody is budgeting 2 billion to build a library. So those things kill tax morale, and people don't want to pay. If you can address that trust and tax morale and use tax intelligence as well as technology and make sure there are no sacred cows, we'll be able to raise revenue. Would we be able to do all of that in 2021? The answer is no. I do not see the signs. So the best we can hope for is maybe attain the same level of revenue that we accomplished in 2020, also in 2021.
All right, Tyrone. So just hang on there. I know, if I'm not mistaken, I think tax to GDP for Nigeria is somewhere between 7 and 7.5% or something.
Exactly 6%.
Yeah, 6. So it's even lower, right? Yeah. So with all these things that the government is trying to do, are we ever going to get to a point where tax to GDP is in the double digits? When is that ever going to happen?
Yeah, it's to be honest, it's not that difficult to get there. The things that we need to do are obvious to many of us. We discuss it every time with policymakers, but the political will to do it is still missing. So if you take everything now from property taxation to personal income tax to company income tax, what I even think that Nigeria needs to do is repeal so many taxes. We have officially over 60 taxes. Repeal all of them. I think we only need less than 10 taxes, and we can make revenue that is more than 200% of what we're making. And we should be talking about 18 to 20% tax to GDP ratio, and it can happen really. But we need to take those steps like using technology, whistleblowing framework, building trust in the system, ensuring there's accountability, and connecting the dots, your BVN to your international travel, to when you register a car, to when you register land. If you want to be a politician and you go to, INEC for screening, you shouldn't just pay your tax 2 days before then. You should be disqualified. That's why we have a lot of touts and criminals who are ruling us, right? If you ensure everybody pays their taxes at the right time and correctly, it takes decency for people to pay taxes correctly at the right time. That alone is a good screening point to ensure that people who emerge as our leaders are the right people that have the interest of the country at heart.
Fantastic response there. I mean, if I hear you clearly, with technology, whistleblowing, connecting the dots, I actually like that part. And then, of course, disincentives for politicians or anybody aspiring for any public position in this country, to pay their taxes. Then perhaps maybe that could get us to the double digits, even 18% of GDP, and that is going to do a lot for us. And guys, we really don't have a choice. That's what we should be aiming at. I'm going to come to you now, Femi. Femi, this year was a very precarious one for government revenues. Government revenues was basically decimated. It's been tough for them for the last few years, not to even talk about 2020, where we had COVID-19. And the government has basically, unofficially sort of resorted to the CBN for a lot of its money. And then, just like Taiwo had pointed out, they are also looking at tapping into the unclaimed dividend funds. I hear a lot of, I was reading on social media sometime last week or last 2 weeks, and people were like, don't touch my dividend, no, don't touch my dividend. I mean, like, what's your take? Like, should we keep having monies lying in there and, not being used for anything? Or, is the government, do they have the moral high ground to actually tap into this fund? And if yes, how do you think it should be used?
Okay, thank you, Ugo, for actually giving me the opportunity to participate here. So the first thing, which is the point I always make when I talk about this particular issue, is that the assumption that unclaimed dividend is idle money and is available may not actually be a correct assumption to really make. Because even if you look at the accounting of it, how the companies that have declared this dividend usually would normally account for it, it would remain a liability of the company, because the owner of that debt can actually show up tomorrow to demand for, this is what you owe me, and I'm entitled to receive this money. So once we have that first understanding that these are funds that belong to individuals that have just not simply shown up to claim them, then you will then appreciate the fact that it's not really idle money. And I know that the government is actually trying to get both this and the deposits that you have in banks that have not been, just to ensure that we can have enough money to do a lot of, or to fund a lot of the government intervention or the government projects. But, to then put it in perspective, you would realize that the challenge or some of the arguments that people have put up is the first, that this would look more like government trying to appropriate private property. This is monies that belong to individuals, and government is trying to forcefully acquire that property from them. And knowing, the story behind it, where government would say, if anytime, during the 12 years that you need to come back for this money, we would make it available. But we know how difficult it is. We know how government has struggled to even pay pension. So the concern is, once the government takes over this money, it's not likely going to find its way out to the beneficiaries eventually. I think that there are other means of being able to, access a part of the funds, maybe not the entire amount, but you could look at how these funds could be recharacterized from an income perspective, such that at the time when it's then not claimed after the 12-year period, the government is able to access a part of it in form of taxes or something. But I also don't think it is beneficial for government to acquire that money wholesome now, only for the purpose of using it to fund government projects. And I think it all boils down to that, to the misconception or the misalignment of the fact that government is trying to be the largest spender, or is trying to spend itself out of recession. And I think, to an extent, government should actually allow the private sector to run to carry the economy through, and give the private sector the necessary support. Allow, for example, the companies that own this money to be able to reinvest it into the business, expand operations, employ more people. In the hands of the private sector, this money would do a lot more than in the hands of the government. So I would think that it is beneficial for this to actually remain with the company, so that they can then use it. Maybe have an arrangement where the companies are able to account for it, rather than keep the money sitting in their own retained or distributable earnings, or just sitting as a liability idle. Have an arrangement where the companies can invest these monies for the benefit of the economy, rather than allow government to acquire it and then begin to spend. We probably would not see the benefit of it eventually.
Thank you very much, Femi, and I agree with you 100%. I actively invest in the stock market, and I know that, and even if they are unclaimed dividends, a lot of these companies hold it as liabilities and often invest this same money in FGM securities, right? And so one way or the other, the government still has a route into tapping these funds. And like you said, perhaps maybe they should be looking at taxing investments arising from unclaimed dividends rather than just going directly into unclaimed. Well, we hope that the authorities are listening in on some of your comments. I'm going to go, just hold on, Femi. I'm going to come to you again. There's something Tyrone mentioned in his presentation that caught my attention, and he also mentioned it just a few minutes ago. He said that perhaps maybe the government should be looking at technology and then tying it into, I think he called it connecting the dots. Right. And then BVN. Should private sector guys be worried? Like, should we, do we need to, should I go and be holding cash or don't need to keep my current accounts again? Because I mean, in these days of BVN, they can easily just check all your accounts. Like, what's the message to the private sector here? Femi, you're on mute. Femi, you're on mute.
Okay. All right. Yeah. Thanks. Okay. So, the important message to really pass across is that the technology drive, or the drive to adopt technology for tax administration, is not targeted at the private sector and is not targeted at taxpayers. Really, it's rather to help the Nigerian tax authorities to help it align with the global best practices when it comes to tax administration. So it is not a focus of the tax authorities to actually apply this technology simply to go after your money. Is to enable them to enable the tax authorities expand their tax reach, which Taiwo did mention, to be able to expand the tax reach, be able to reach the informal sector more, be able to collect tax on a real-time basis, and this is where the world is actually going. So you look at jurisdictions like Brazil, you look at jurisdictions like the UK, where they are moving to real-time tax reporting, and many of those jurisdictions are no longer doing audits after the fact. They are trying to ensure that tax is verified and collected at the time the transactions are then concluded. So these technologies are actually to help the tax authorities to be able to stay on top, or to be able to monitor transactions, or even be able to expand the tax net clearly, because those technologies will enable them have access to transactions that are done probably on a real-time basis. The FRS had talked about launching to, I think, deploy to some of the retail stores, and the essence of that is to, on a real-time basis, or at least on a daily basis, to be able to get information on transactions that are concluded or sales that are done by the retail stores on a daily basis, and be able to determine how much VAT is then due to government from the transactions of that day. So the technologies are really to help, the government to be able to improve tax collection and be able to administer tax better. But I don't think they are really directed at taxpayers. And what I would say really is that for us as individuals, we realize that technology is really impacting the way we live, and it's definitely going to impact the way we do tax, and it's going to impact the way tax administrations are going to be able to collect taxes. So everyone has to then realize that you need to update your compliance status, ensure that you are tax registered, ensure that your filings are up to date, so that even if the tax authorities then do get information on you or on your business, there is no need for you to be in a panic mode, because definitely you would have been up to date in terms of your tax filing. So the target is not individuals, is not you, but it's to help the tax authorities be able to do their jobs better.
All right, thank you very much, Femi. I remember someone said that the best way to avoid tax or higher taxes or tax penalties is to be tax compliant. So yeah, sure. It's good to hear that it's not directed at the private sector, even though I'm sure some people might not totally agree. But I mean, Nnamdi, I'm going to come to you now. I mean, you've heard Femi and you've heard Taiwo. It's looking like the federal government is going to rely heavily on taxes this year, 2021, to at least increase its revenue. Should the private sector really be worried? I mean, you're a private sector person, and very much so. I'm sure you've heard of people complain a lot about multiple taxation. Not from, if it's not from the federal side, it's from the state side or from local government side. What exactly, should the private sector be worried about when it comes to the finance bill?
Okay, so with regards to, first of all, thanks, Ugo, for the question and for inviting me to the panel. With regards to the tax issue, I don't think the private sector should ideally be worried. Like has been said earlier, the major thing is that as long as you're tax compliant, you don't have an issue. The major thing for me would be that, one, how can we eliminate multiple taxes? And secondly, can we have the tax authorities actually also do their own homework before coming out to meet people for tax payment? We had a situation about 2 years ago where FIRS wrote to various banks and froze people's accounts, right? And basically put a lot of people out of business or denied them access to their accounts for quite a while. So I guess the fear some people might have will be, look, are we going to see those kind of scenarios come up all over again where you have the tax authorities using BBN to try and calculate, using your revenues to try and calculate what your tax figures are? But I think that as long as you're tax compliant, I don't really see what the issue would be. But on the other side, you talk about multiple taxes, even by the state governments, and actually a pertinent question, because I remember we used to run a restaurant somewhere in VI, and the number of government agencies that would come to you for different taxes and levies was mind-boggling. There's even a time they shut us down because they had told us to clean the drainage right in front of the building, drainage that should be cleaned by government. And in delaying to do that, they came in and shut us down. So the question was, so why are we paying taxes? So if we pay taxes to the government, people expect certain things back from the government. So I guess part of the challenge for some of the private companies would be, look, we pay these taxes here to provide our own security. We have to get our own water through boreholes. We have to generate our own power. And then you have government coming to tax you with all sorts of levies. I've seen Ogun State try to harmonize, their tax payments and tax monitoring system versus some other states where you still have the whole haphazard system of collecting taxes, where you have about 5 or 6 or 7 different agencies coming to meet you all at the same time. So I think the major thing would be for a lot of these agencies, a lot of these governments, state and federal, to also realize that you can harmonize it, make it easier for people to comply with taxes. And when you do that, people will be more willing to pay their taxes. And then also, they shouldn't look at just squeezing those who they already have on the tax net. They should focus on trying to widen that net, because you have so many people who are not paying taxes, right? But they keep focusing on the few who are paying taxes already. So how do you widen the tax net? Hopefully with technology, you may be able to achieve that. So those that you might see a bit concerned would be those who are not paying taxes, and those that government might be able to track now using technology.
All right, thanks, Nam. Nam, is still with you. I listening to or going through Tyro's presentation, he did mention that there wasn't going to be any increase in taxes whatsoever in 2021, at least from this finance bill. But all over the world, we've seen a lot of tax cuts play a major role in trying to stimulate the economy, especially from the private sector point of view, because of COVID-19. Do you think perhaps maybe the government should have done a lot more around the area of tax cut? Because if you listen to Femi as well, maybe it should be the private sector really driving economic recovery and not government trying to do this. What would you think, or I mean, if you had the opportunity, what kind of tax cuts will you be looking out for, or could you have been looking out for?
Well, I would say first of all, with the finance bill, they've tried to address some of these tax cuts. You have small businesses that have a turnover of lower than 25 million. they're going to have zero tax. You have medium-sized companies who have reduced tax 20%. So I think with regards to the corporate sector, I think they've tried a bit. So the question will now be how much or what can you do with regards to the individuals, people who have the payee tax system to do with. I remember seeing a survey sometime back done, I think it was in the US or so, where it shows that when you reduce taxes of the common man on the streets, they tend to spend that money and help stimulate the economy, stimulate trade, versus when you reduce taxes for the large corporates or for the people who we basically call the wealthy. What they tend to do is to invest the money. So either you have people, if it's a foreign company with subsidiary in Nigeria, they'll be talking about repatriating their funds back. If it's a wealthy person, he's talking about converting the money to USD or investing in some maybe bonds or treasury bills or something. But when you can reduce the taxes of the lower income earners, they tend to spend that money, and that helps stimulate the economy a lot more. So I think it's somewhere I'd like to see them, a bit more active, trying to reduce taxes for the common man on the streets, because those people would spend the money, and that would help you in stimulating the economy more, especially now that we've seen that we're officially in a recession.
Good stuff. I'm going to come to you now, Tyro. Tyro, I mean, you heard in the government seems to have done well, at least from a corporate tax point of view. Also considering that they need these taxes, by the way. I think you also did mention that, there's no more personal income taxes for people on minimum wage or below minimum wage. But there are also indirect taxes that I actually think impacts on Nigerians the most, and that's taxes like import duties, all sorts of custom duties. I think in your presentation you did mention that they're going to reduce import duties on trucks and vehicles. So could you maybe put a bit of color into that? What does that really mean for the average Joe out there?
Yeah, thanks. So it was on my slide, actually didn't me, so I have the opportunity to explain that. So what governments did before was to increase the import duties on vehicles to about 35%. And then there was also import levy of about 35% as well. So that if you import a car, you pay about 70% of the cost of the car in levies and duties. The reality is that Nigeria is not at that level where people can easily cough out 70%. If you bought a car for 10 million, that's 7 million. So what people have been doing is find other ways of bringing it in. So government is not collecting the money, the cars are still coming in. So what government has now said they want to do, I know again, there's a lot of mistrust, but I do agree with government on these policies. Their point is that the guys who are manufacturing cars in Nigeria today can only do about 14,000 vehicles a year. And the demand for new cars in Nigeria is about 700,000 a year. So that gap is so wide that you're just punishing everybody by asking them to pay 70%. So what government has said they will do is let's reduce the import duties rate so people can at least afford to buy those vehicles. Many of them are not luxury vehicles, therefore businesses as well, including trucks and mass transit buses. And then government will commit, and I hope that they can write it into law to say government would only buy cars from local manufacturers. So imagine if all the states, all the MDAs and federal government sign a law that they only buy cars locally, they will buy the 14,000. So which means the local manufacturers are fine. The rest of society is also fine. As they ramp up production capacity, we can progressively increase the import duty rate. Otherwise, it doesn't make a lot of sense to me to just punish people. So that's the bit about the import duty. And then to your point about indirect tax. So if we exempt poor people from personal income tax now, then the other point is that the Finance Act of 2019 actually has done a lot in exempting people from indirect taxes. VAT went up to 7.5%, but over 600 food items were stated as exempt, which means you don't pay VAT on them, right? Including education, medical equipment, and a lot of other things. The problem in Nigeria, though, is that a lot of poor people pay taxes, but they don't pay those taxes to government. They pay what we call informal taxes. So informal taxes are paid to touts and some other people. So when you use fiscal policy to reduce their taxes, they don't feel the impact because what they are paying officially to government is small, which is why our tax to GDP ratio is also small. If you permit me in about 1 minute, one question I've also seen recurring here on the platform is my take on state government wanting to borrow from our pension money.
Yes, please put that to bed.
Yeah. So I say so there's a lot of miscommunication in Nigeria. Again, back to lack of trust. I don't blame people, but to be honest, there's absolutely nothing to worry about. As of today, majority, which means more than 50% of our pension money is already with government. So it's either they put it in sukuk or they put it in federal government bond, because by law, that's where they can put big portion of those money. So if state government wants to borrow, all that we need to do is to provide safeguard. One, it has to be a borrowing in form of maybe a bond that is tied to specific infrastructure that can pay itself back. Number two, there has to be a provision that allows us to do a first charge against the money that will be shared from federation account to those states. So that if you refuse to pay, we just take your money from source and give you the balance if there's anything left. So I don't think Nigerians have anything to worry about other than to say, let's make sure there's proper framework for this to happen and for the money to be used for things that would result into productivity and to stimulate the economy, particularly infrastructure.
Thank you very much, Taiwo. Oh my God, we've got just 10 minutes left for this particular session, but I do see questions from participants that I think I'm going to take now. So I'll just keep my own questions and I will take them. So I'm going to come to you quickly, Femi. So this question here is from Ose Meka, and he says, will the exemption of SMEs from the preparation of financial statements not affect their ability to obtain loans from commercial banks? I guess to him, he's saying that, look, if I go to a bank to get a loan and they say that I'm not paying taxes, how does that help me? Do you want to address that, Femi?
Yeah, indeed. Okay. Actually, if you're
okay,
a bank,
Taiwo, go ahead. Then Femi also chip in as well. Taiwo, go ahead.
Oh, sorry, I thought it was at me. Okay, so let me be brief about it then. So as a what you want information that is reliable. So that's why you say the information must be audited. But what we have seen is that the fact that information is audited in Nigeria does not mean that you can rely on it. So what you can do, which is what is done everywhere in the world, is create a framework. Even the CAC now, the Corporate Affairs Commission, is creating a platform that is powered by SBRL, where you can provide your information centrally. So we should get to a point where nobody should be asking you for financial statement. They should just plug into that central point that is linked, again, connecting the dots. So if you lie in the account, we can easily find out. So FRS can then say, this is a simple template for you to file your returns. Even though you're exempted from tax, I'll give you a clearance that you have done the right thing. And then when you apply for borrowing from a bank, then you're fine, in my view.
Thank you, Taiwo. Femi, you want to chip in as well? You want to chime in?
Well, yes. Yeah, so the point to remember or to note is that once this goes into effect, the FRS will honor whatever format they've asked you to file, whatever format they've agreed to, then accept that returns in. So you will still be able to get your tax clearance based on what you've prepared and filed. Where the challenge may then be is with the bank. There are banks that would say you must have audited accounts for them to be. So if you have a where the bank is definitely requesting for this, to meet up with that obligation, you may have to comply. But for tax filing, as long as the FRS is not insisting that you present that, then that may be and you still get away.
All right, Femi. So, I mean, at the end of the day, if you want a bank loan, I just think that it makes sense that you have proper financial statements. I mean, you can't want to go to a bank and not comply, with financial reporting, requirements. I think it makes a lot of sense. I'm going to come to you, Namdi. There's a question here from Akim Oyewale, and I think that I'll direct this question to you. He says here, are there incentives for corporates in the capital markets where some waivers next year could lead to higher taxes in subsequent years when taxes improve. It appears maybe he thinks that there are taxes likely for investors or corporates that invest in the capital markets to incur. Do you have any comments? Can you respond to that? Nnamdi, you're muted.
I can see you're still asking if there's room for incentives for corporates in the capital market. So I think there always is. You can have, you even have cases in the US and co where you can encourage people. So basically they can encourage people to first of all list on the capital market, and in exchange for listing, like they did with MTN, you can get certain incentives. They can also have people in the capital market, for instance, ask them to sponsor certain projects. It can be COVID, like where they've done exemption for people who have invested in the COVID funds. You could have a case where you can ask them to take on certain projects like Dangote developing the port road to Apapa, and at the end of the day, you get some sort of tax right back for that. So they could use those to develop their areas and help improve their business processes. And in the end, you would have increased business for them from infrastructure they've been able to develop. And at the same time, it goes towards paying taxes themselves also. So I think we could look around things like that as an incentive. And also, even to get people to list, look at ways of reducing the cost of listing the capital market, which would encourage more people to come into the capital market, and also naturally give them more access to capital, right? Because we all know that the cost of listing, the cost of raising capital can be extremely expensive. So look at different ways to do that. So you give them incentives and help them develop infrastructure, raise capital in the market, list also on the exchange for new people to come in and list. So I think we definitely have a lot of room for that.
Okay, let me go to Femi on this one. Femi, there's one question I have here, and I'm basically piggybacking on what Nnamdi said here in terms of maybe tax credit and incentives. Why is it that in Nigeria, you don't have tax credit given to you in cash? Like, why can't they just give you cash? Why is FIRS always telling you to net it up against all tax in the future? Why can't they just pay you the cash? Why?
The simple response or the simple answer, maybe the way to ask you is, do you want the short answer or do you want the long answer?
Short answer.
Because the short answer really is that Nigeria is broke. We cannot afford it.
We
cannot afford it. So the FRS is also, the amounts that are paid back as refund every year have to be approved. So the FRS has to submit an approval. Whatever they submit would also be verified. So even if they submit a very high number, what is approved is sometimes lower and all of that. So the monies that are available for cash refund are usually not significant. So it can't go around everybody who is making a claim. And that's why they would try to manage that by saying, you know what, let's give you a credit to go forward rather than give you a cash refund. And even, from the FRS's point, they sometimes also consider it as a failure for them to give you cash back. So they will try everything they can to ensure that you don't get the refund at the end of the day. And I think that is part of the mindset that, we need to try and get them to stop because that does not enable businesses to be able to use that as a means of funding their own operations going forward.
Trust me, man, I would want my cash back, no tax credit. So the final question here is going to you, Taiwo. This question is from Benga Ogunkoya. This one is actually a little touchy. He says here, how do we ensure the tax authority properly aligned? This is because, for example, we own an LPG business. In filing our tax, we practically had to fight the tax office to let them know that LPG is VAT exempt. Why must we, as a business, be the ones to educate the taxman on what should be public knowledge? A lot of people seem to have this issue with tax authorities. Or, I remember one time when I was financial controller for a company, and the argument was whether to pay VAT on the sale of a property. And I basically was going into old tax textbooks and laws just to explain, why do we have to go through all that? Is there like a knowledge gap from the taxpayers' point of, from the tax authorities' point of view, Taiwo?
Yeah, the answer is yes. So we have a lot to do in terms of capacity building. for the tax officers, but I would also say for taxpayers. On the average, my experience around the world is the ordinary person on the street has an idea about what the tax system is talking about in most countries than in Nigeria. So I have a lot of friends who relocate to Canada and the US, and it's the first time they are paying attention to tax matters, even though they worked in very high positions there for even sometimes over 10 years. So I think it's on both sides. It was good for this person who asked this question that they knew the position of the law. Otherwise, you start begging, and after begging, they now say, okay, I can help you, and then you get into settling something under the table when knowledge could just have helped you. So sometimes we all have to, even at my level, we have to go through that painful process of back and forth, because you quote the law and explain, and the person will not want to agree, you escalate. Many times we go to court. You know, PwC just won a case for a client, like I think 3 or 4 days ago, went to court. So I'll say don't be frustrated, because it's not a problem that will be solved overnight to get tax authorities to know all that they have to know. I keep talking about technology. In many countries, it's not like you have to cram all the tax provisions in your head. It's just on your mobile, right? And you know, PwC will have a tax app. I would even recommend that to everybody. It's called Tax 247. You can go to iOS or Play Store, and it's free. So on that app on your phone, you have all the tax laws, so you can search. So when they are telling you something it doesn't make sense, just quickly search and show them the section of the law. Most times it does the magic, and when it doesn't, go through the process of objecting, appealing, and then in most cases you get the right outcome. So don't give up. It's just one of those other problems we have to deal with, bearing in mind that many of the people who get into those positions did not get there because they are competent. They got there because somebody gave a lease and they signed it, right? Yes. And we all know this more than anybody else.
All right, thank you so much, everybody. Nabia, I know time is up, but I just wanted to take you on this one. 1 minute, you got 1 minute. I didn't want this question to go. You've seen that, you know, from an investment point of view, there are a lot of tax exemptions for Nigeria. But somebody mentioned to me that what if one guy wakes up one day and says to the government, maybe it's time to tax cryptocurrencies or investments in forex trading or investments overseas. Do you see government trying to explore that anytime soon, particularly as it affects younger people?
I think so. I mean, we've already seen that the new finance law talks about digital payment establishments, right? Which basically looks at people who are looking at the digital economy, and if you're making significant revenues, basically from places where you're not set up per se as per infrastructure. We've also seen that happening internationally, where we've had UK and I think France also talking about taxing such people. So is it possible? Definitely it is. All they need to do is come up with a policy around, and to be honest with you, it makes sense. If you have someone, right, who has set up, say, in the US or in China, and he's making tons of money from Nigeria, it makes sense to tax him because he's making money from your people, right? Just that he doesn't have a physical presence in your country. So do I think it's possible? Yes, it is. All we need to do is for them to tell us what they mean by, in terms of trying to explain it a bit more, because they have 1 or 2 gray areas in that particular law, right? What they mean by significant economic presence. But still, I think it's possible, and I think it's something the government should actually explore. Not even just cryptocurrency. You have Facebook, you have Instagram, you have different social media platforms that make a lot of money from people within the economy or within Nigerian space, and I think it could be a major source of income for the country.
All right, Femi, buy, sell, or hold. Should they tax things like cryptocurrencies, people who do Instagram businesses, forex trading? Buy means yes, sell means no, hold means you're neutral. So buy, sell, or hold. Should we be taxing cryptocurrencies and co?
Government is broke, so answer is yes.
Buy. So that's a buy for you.
That's a buy for me.
All right, Taiwo, buy, sell, or hold. What should we be doing? Taxing cryptocurrencies, taxing forex trading, investment in forex stocks. What do you think we should be doing? Buy, sell, or hold? Is Taiwo there?
Yeah, I'll say hold, because we need it. Yes, hold.
All right, hold for you. All right, guys, thank you so much for a fantastic session. We're done with the first session of this wonderful webinar where we dealt with the finance bill. We've had interesting nuggets here. I've had so much written already from this interaction, and I'm sure that a lot of you have as well. We tried as much as possible to take all the questions. We still have so many coming in, but not to worry. Towards the end of this webinar, we will take random questions where we'll have all the panelists at one go. So just stay locked in.